Today we have another banking giant jumping into Bitcoin. You have a huge giant, another giant from Japan. I don't know if I could say this right. Nomura. I think that's how you say it. But they are a 500 billion with a B investment bank. Okay, and they're launching their Bitcoin adoption fund for institutional investors. I wonder why. Why is there so much institutional interest all of a sudden? Well, I think we know why. Okay, because next year is going to be the quadfecta. We also know that BlackRock's in the game. When BlackRock comes in, everyone starts paying attention. Larry Fink, he wants to dominate. I'm not saying him dominating Bitcoin is a good thing, but the very mere thought of dominating Bitcoin has others salivating, and they want to come in too. That's why we have Vanguard and BlackRock and Fidelity and everyone else jumping in, and now you have another banking giant jumping into Bitcoin, right? Now, as retail investors, why we're in it is because, number one, we don't want to see inflation rob us of our buying power. Number two, we like to be part of the most decentralized network on the planet. And three, we want to hold the greatest store of value there is. Nothing has outperformed Bitcoin over the last 10 years. Nothing is even close, right? Institutional investors, though, however, they're coming in is they want to make money. It's pure and simple. Well, retail investors want to make money too, part of the store of value. But these institutional investors, they're late to the game. They know that they're late. Retail has been leading the way, but now they're all jumping in because they don't want to miss out on the gravy train, especially with next year, 2024 and 2025 coming up. They no longer want to sit on the sidelines and watch retail investors make money hand over fist while they still make their, whatever, 2, 3, 4%. Why do that when you can make 1,000%? Right? That's what Bitcoin and crypto brings. So that's fantastic. And of course, when you have these big boys coming in and retail investors still DCAing, what happens with the reserves? Reserves keeps on dropping on exchanges. That's what's happening right now. There's just a lot of buying going on from all over the place. That's why reserves keeps dropping. We're now back to 2017 levels. 2017 levels. And we continue to drop more. And here's another chart that shows you have long-term position, you have addresses with over 10,000 in Bitcoin, and volatility. Okay, they are going in opposite direction. Volatility has fallen very much so. That means Bitcoin is very stable, which is fantastic. You have addresses that's holding above 10,000 in Bitcoin, just skyrocketing upwards, and you have long-term position skyrocketing upwards too. Again, people are not fearful about Bitcoin. People are getting more greedy about Bitcoin, and that's the right move. It's much better to be greedy now than fearful, in my opinion, because of what's going on in the world, what I just mentioned about irresponsible printing and debt, and also about the quadfecta coming up in 2024. Why would you be fearful of Bitcoin now? This is the time to be greedy. And here, again, it shows Bitcoin in all previous cycles leading up to the halving event. And then what happens after the halving event? Every single time. This time is going to be no different. Okay, this is why. This is why you got institutional investors all salivating, all trying to enter the space right now ahead of the halving event. Next year, we're going to have rate cuts. Okay, we're going to get rate cuts. We're going to get the halving event. We're going to get big institutional money coming in because of spot Bitcoin ETFs. They will be approved. And you got a presidential election coming up. You have the quadfecta happening next year. We're getting closer and closer and closer. We're almost in October already. This year, 2023, is almost over. 2024 is right around the corner. And just to remind you guys how significant each halving event is, look at where we are right now. Every 10 minutes, a block is found and 6.25 Bitcoins gets released. This is only the third halving, right? This next one with the fourth halving will decrease the reward in half to 3.125. Then the one after that decreases it to 1.56. And finally, in 2032, there will be less than 1 Bitcoin being released per block. And then, just look at that, okay? It gets significantly less and less and less and less, of course, as time goes on. There is no other asset on the planet that has an automatic halving of its supply, right, every 4 years. And there's no other asset on the planet that has a finite supply that we know of. Okay, for example, oil, I'm sure there's a finite supply, but there's so much of it, we can't even predict when the end will be, right? Same thing with gold, and gold exists in space, right? With Bitcoin, it's all dictated by code, by the miners, and it will never, ever be changed. It's so different. It's the best asset that we have. There you go. All right. Outside of Bitcoin, what else is there? What else is there going on? We got Coinbase that's launching a campaign to drive crypto legislation in the U.S. This ad campaign will call crypto users to contact their Congress members to support national legislation. Interesting. And why do we need this? Well, we need it because Gary Gensler is still in the office. That's why we need it. No one likes Gary Gensler, not even Brad Garlinghouse, who happens to be in front of the SEC building. I have been in front of that building too when I visited Washington. I'm pretty sure that's in Washington. But yeah, no one likes Gary. And we got so many people still fighting Gary. We got Coinbase that's fighting Gary. We got Ripple that's fighting Gary. We also have Grayscale that's fighting Gary. And Grayscale just happens to be filing another ETF, this time a Ethereum futures ETF, although some have filed for Ethereum spot ETFs too, right? Grayscale is also, they won a big case against the SEC, but it's not over yet. They're still fighting. Everyone's fighting the SEC.